There have been a couple headlines about rents in the United States that have caught my attention over the last couple of weeks. First and foremost, year-over-year rent growth has been flat for several months. And from September to August, we actually saw a slight decrease in rents, at least on a national basis. So I'm joined here by my friend Zach Lemaster from Rent to Retirement. And Zach, I'm curious, does this mean you're selling all of your properties?
Dave, we're done investing. We're cashing in. What else we want to talk about?
I guess that's it. We're done now.
This is a super important topic, Dave. I think super relevant right now because this is an area that we have not talked about a lot. And this is something everyone needs to be conscious about, especially in high interest rate environments where cash flow is limited, is where is the rent increasing? Those are the areas where we can be confident to invest for sustainability long term.
Well, that's a great point. And yeah, obviously, we're poking fun at this. And obviously, this is a very important metric that people should be paying attention to. And national trends do matter. But in today's video, we're going to dig into some of the regional differences that we see, differences we see on individual metro areas, and talk about metrics that you can also be looking at to determine what markets to invest in and where rent is growing in your areas. So Zach, thank you so much for joining us for this episode.
Dave, thanks for having me. Always a pleasure. And I couldn't agree more. I think rent growth and future rent appreciation is something that is just an underserved statistic that not a lot of people look at. Everyone thinks about cash flow, but a lot of times we get hyper concentrated on thinking about year one cash flow and not looking into the future to see where things are going to be as far as income and cash flow a few years down the line. And I think this is in particular a very important topic, especially right now, because we have limited cash flow with high interest rates. And we have some, as you're going to talk about, we have some dynamic rent changes in the country that we really haven't seen before.
Before we get into any specifics about regions or markets, I just wanted to provide everyone with sort of a high-level overview of what's going on in the rental market. For many years, it was just pretty standard, basically a little bit more than inflation. But starting in 2021, rent growth really exploded along with housing prices and peaked, sort of in the first quarter of 2022, at least on a national basis, where rent growth hit 16 or 17% year over year, which is unheard of. It's just absolutely insane and sort of had to come down and has been coming down ever since. And we've reached the point now where it's about flat year over year. And it has been relatively flat for the last 4, 5, 6 months. And to me, that sort of makes sense, at least on a national basis. Zach, I'm curious what you think, because it always sort of felt like what's sometimes called a pull forward in terms of rent, where what is the growth that is normally stretched out over several years was sort of just condensed into a couple of years. And so at least on a national basis, to me, it sort of makes sense that it's slowed down. What do you think about that?
Yeah, I think we're getting back to normalcy. Obviously, the trend that we've seen over the past 2 to 3 years was not sustainable. There's obviously an affordability issue in many parts of the country already. And so this is only exacerbating that. But I think exactly what you said, you hit the nail on the head, Dave, that, we saw, and same could be said for home prices and a lot of these areas as well, but specifically with rents, we saw this dramatic growth where it's just crazy increase in rents. And now we'll probably see some leveling off, some stability for some flatlining in some areas. And then probably we'll see that kind of get back to that normal incremental increase over time. But interestingly enough, some of the markets that we're going to be talking about today are not following these national norms and are actually seeing still double-digit growth year after year. So these are markets to pay attention to.
Yeah, I think that's a great point. Obviously, individual markets are going to differ. That's true of regions as well. If you look at this chart here, you can see that certain regions like the South and the Midwest are seeing above average rent growth as a region, whereas the West is negative year over year. So there's a really wide spread. And I think that's probably a good segue for us to start talking about some of the markets. Zach, you've done some research into 3 markets that you have seen having strong rent growth over the last couple of years. Can you tell us about the first market?
Absolutely. And so these are markets where I'm so happy to personally invest, probably because we're following the trends, but we did not choose these areas, Dave, as you know, because we invest in these areas. It's because these are leaders in the nation of rent growth. And so the first market that we're going to talk about is Cheyenne, Wyoming, which we don't hear Wyoming a lot, but this just so happens to be my hometown. So I'm intricately familiar with Cheyenne.
Nice.
And we've invested in Cheyenne for a very long time. Cheyenne is the state capital of Wyoming, and it's geographically located right on the border of northern Colorado. And so there's a lot of interesting stuff. I can easily go into some stats about why this is interesting, but Cheyenne is the first market.
All right. Well, what do you like about it?
I think the first thing that stuck out to me, one of the things that we looked at when we were considering rent growth, Dave, was just we wanted to look at a global picture of like percentage of renters to homeowners. I mean, this is something historically we've looked at more in depth, like with neighborhood classes, because we like to see a strong mix of homeowners and renters in these areas to actually show that people are also owning homes in these areas, to know that we have a strong exit strategy if we want to sell to a homeowner or a renter. But these are attractive areas where people want to live, often young families. But Cheyenne had, out of all the markets across the country that we looked at, with over, I think, 50,000 population, it had the highest percent renters at 39% and 61% owners. And so this shows that there's a strong percentage of renters in this area, still majority owners, which we would expect of all markets. But this is something that is really important to look at. The population now of Cheyenne is 65,000. We've seen a strong increase in median household income. The median household income in Cheyenne is $70,000, where the average rent now is about $1,500, with the average price point being around the 350s. And so what that shows us immediately is that you have a strong demographic of people that can actually afford rents.
Yeah, that's good.
There's a diversity of industries, but the thing that points out, that stands out to me is the rental increase, which is what we're talking about today. And we always like to look at, Dave, when we look at stats, I think it's important. I mean, you could speak to this, quite intricately, but I think that when we look at stats, it's important to look at, well, what is the time frame that you're trying to pull data from? Because if you look just over the past year, maybe that's not long enough to show like a really longer term trend. We like really that 3 to 5 year period of time, because that shows that there's a trend happening and it's likely to continue. If you look over like 10 years or longer, that could be skewed data through multiple different market cycles. We want to know what's on the horizon over the next 3 to 5 years. So anyways, the median rental increase that we see in Cheyenne, Wyoming, from January 2020 is when we ran our numbers, has increased 10.7% for 1 bedroom, 18% for 2 bedroom, and 17.8% for 3 bedroom. That's kind of your core rentals, right? That 1 to 3 bedroom. So that is double-digit rental increases for all those asset classes.
Well, there's a couple things I want to go over because you just dropped a lot of knowledge there. So first and foremost, I think that the ratio that you talked about where you compared the income of the area to the median rent is super important in making sure that it is affordable for tenants and that it's a sustainable business that you're operating. And so I highly recommend doing what Zach did just there. And then just also wanted to reinforce the idea that looking at data, or it really depends when you're looking at a trend on the timeline that you choose, and you can choose whatever one you want. But especially given what happened during the pandemic, where things weren't sustainable and were highly unusual, looking back at 2-year rent growth is a little bit, could skew your expectations. And so agree with Zach, looking back a little bit further is really helpful. And then also just understanding the underlying demographics and, fundamentals about supply and demand in a market is super helpful. All right. So Zach, what is your second market?
The second one we chose, Dave, which is one that most everyone has heard of and has been constantly a leader in whatever the stat is, whether it's a home appreciation, population growth, economic growth, but certainly for rental growth, is Huntsville, Alabama. And this is an area that's just exploding for multiple reasons. It's got a lot of tech coming into it. Boeing has national headquarters there. I mean, huge military and government presence, NASA. This is just an area that is growing dramatically, and it's become actually pretty unaffordable for, relatively speaking, to a lot of the areas in the Southeast. But this is an area that's just blowing up. So Huntsville and surrounding areas is our number 2 market. This is an area, going to our first stat, where renters are at 36% and homeowners are at 64%. So still a strong presence of renters. And I think a lot, especially with the military and government, like they're pulling people into these areas that need immediate housing. There's a huge housing shortage in Huntsville.
Is this one of those places in the South where you're just seeing the population really explode over the last few years?
Oh, absolutely. Huntsville's been on the radar for a lot of investors for a long time. But kind of the common theme over the past few years, I would say 4 to 5 years, is it's just unaffordable. Like you can't cash flow in the area. So we do a lot of build to rent in this area and new construction, both in Huntsville and surrounding markets. Like an area we work in is just within a 20-minute commute out of is Hartville and in certain areas. But I think Huntsville is an area where you constantly see growth and there's a common housing need. So naturally, we would expect rental growth to increase there. So since January 2020, we saw a rental increase on a one bedroom at 26%, 28% for two bedrooms, and 23% for three bedrooms. And we only run our stats based on those because once you get into that 4 or 5, 6 bedroom, that's more of a family owned residence. And so that's also important to know, like, what are you looking at statistic wise? We like to be in that 1 to 3 bedroom because those make up the vast majority, like 80% of the rentals. So that's what we want to pull our numbers from. But Huntsville is an area that's growing.
You've used this stat about the ratio of renters to home buyers a few times. Do you have like a baseline of what's good in terms of that ratio?
This is something we generally look at when it comes to neighborhood classes, meaning like, hey, what are we going to be in? Is this a B area? Is this an A area? Are there more people moving to this area that want to rent? When we talk about neighborhood specific information, we want to be about a 50% homeowner to tenant occupancy.
Oh, interesting. Okay, that's pretty high. Yeah.
That shows that there's a strong tenant. Like if you went down to a 90% tenant, or even some areas are 100% tenant, again, this is neighborhood class talking. You're more in like really low income, Section 8, subsidized housing. And those are areas you just need to be conscious of what you're investing in. But when we talk about a market as a whole, generally once you get below 30% of renters in a market, that would be an area to say that there's just not a lot of renters in this area. Like you may have a hard time finding, tenants. We want to be in an area where you have high percentage of renters and also an undersupply of housing in general, which all these areas do because we're seeing the increase in rents, of course.
Yeah, it's super important because, we talk a lot about population growth, household formation, but the demographics of who's actually, the number of people who are actually going to rent is what's going to drive your, occupancy rates, vacancy rates, and rents.
100%. Yeah. And so the trends, and these are dynamic times, post-COVID, but also where we're at with interest rates, we're starting to see also the trend change, right? With there less home buyers right now. And so I would say nationally too, we're starting to see more renters than we've previously seen, just because affordability.
All right, great. What do you got for our last market?
So our last market is an area that most people probably haven't heard of unless you're from the South. Greenwood, South Carolina is what we would call a secondary market to Columbia. It's about an hour and a half west of Columbia, and this is an area that just pops up. And I think we've talked about this previously, Dave, but a lot of these secondary markets that people just maybe aren't the mainstream areas, the highly populated areas, these are the ones that keep popping up on, the trend leaders. Maybe this is because economic development, there's just, there's not the housing infrastructure in these areas. And so there's a huge undersupply. So like from a build to rent perspective, this is a perfect area where we want to come in and follow those trends to provide housing for individuals where there's affordability issues and simply lack of supply. But in Greenwood, South Carolina, we see a 35% renter to 65% homeowner. We've seen a median house price increase, like 48% since 2016. So that also shows just undersupply, but we're talking about rental increases today. And so since January 2020, rent has increased 10% for one bedroom, 16% for two bedroom, and an astonishing 25% for three bedroom.
Whoa. Oh my God.
So,
wow.
And the average rent in this area is about $2,200 a month. That's mainly pulling from three bedrooms. But wow, this is an expensive area for a smaller populated area in the Southeast.
I really like that you're breaking it down by the bedroom count because we talk a lot about medians, and obviously that's helpful if you're trying to pick a market in the United States. But clearly, if you're trying to identify specific properties or neighborhoods to buy, this is super important. Zach just showed that just isolating a certain type of property or properties with a certain characteristic can totally change the potential performance of an asset.
That's why it's important, Dave, when you're looking at, sometimes we throw out national averages and we hear these things on the news and the trends. It's like you have to be very conscious about where the data is coming from. And I think you do an excellent job on the information that you put out on your channels and on BiggerPockets about, really being intentional about pulling statistics in the area that you're looking at, and also the type of assets that you're wanting to invest in. Because if you're looking at median home prices in an area or median rents or things like this, it's like, what type of asset is that for? And so that can really help to make an informed decision, really breaking it down to understand both the information that you're taking in and listening to, like where is that coming from, but also when you're looking to invest in a new area, what data points do you need to pay attention to? It's a sea of information out there and you get lost in it very easily.
Yeah, well, you've done a very good job isolating some of the really important things for people here.
That's the main point I want to get across to people is like, regardless of what's happening out there, economically speaking, with lending, with different trends, like there's always opportunity. And, being an astute investor in the BiggerPockets community, looking at the data and trying to find out where the opportunity is, that's what's going to make you a successful investor in any market cycle. And that's what we're here to provide you for is, look at where to look. And here's some 3 great markets that may be on your radar that weren't previously.
All right. Thanks again, Zach Lemaster from Rent to Retirement, for joining us today. If you want to learn more about Zach or his company, you can go to renttoretirement.com. Thank you all so much for watching. We'll see you next time.